What do you think of the IPOs we've seen? I mean, we've seen some high flyers like Chewy.com last week, but we've also seen companies like Uber where they fell below that price that they had set initially.
Yeah, I think right now you've got something like 35 to 40% of the IPOs that have come out this year up by 50%. I mean, you've seen some really great results. I think when I was on last year, I talked about how excited I was about this year as a time for all this backlog of great companies to finally get public. So I think it's a phenomenal thing. You did see Uber and Lyft do relatively poorly. Having said that, if you think back to Facebook, Facebook also pushed the edge of what their IPO was priced at, needing to hit that $100 billion price, and didn't perform well for a period of time, and it's done just fine since. So sometimes that temporary aggressiveness of push for what you need to get, maybe it's between the entrepreneur and the bankers, can offset things. But
you think Uber and Slack actually end up performing well eventually, like a Facebook share?
Uber and Lyft versus Slack. Slack, I'm excited to see what happens with, because Spotify was the first direct listing, and I think it went a lot better than people expected. People were really worried about liquidity because you don't have a true market-making function of the underwriter setting the price in exactly the same way. But I think Uber and Lyft have a really good chance of being exceptional companies from a public point of view. You have Jeff Immelt, who's a venture partner with us, was talking about how excited he was about Uber just in terms of their performance. They went to 600 cities in 6 years. For a company to do that is going to come with a lot of growing pains, and there was obviously some internal trauma there as well from a certain cultural perspective. But, it's what I use every time I land in an airport.
If this Slack offering is successful, do you think we're going to see a lot more directs?
Could be really interesting. I mean, the thing that's unique about the directs are you have to have enough capital in the company, you sort of were talking about this earlier, not to have to raise more. So I think Slack still has between $1 and $3 billion on the balance sheet,
right.
So they don't have a need for new capital. They do have a need for liquidity, motivation for employees, acquisition currency in the form of the stock. But I think if that goes well, there's a tension here. Companies are staying private too long. They are raising too much. I would argue Uber and Lyft are both examples of companies that stayed private too long, raised too much, used all of the energy and momentum and excitement about their companies during the private phase and didn't leave anything on the table for the public.
Right. Do you think Slack becomes a takeover target once it's public? It becomes a much more complicated situation because that's a company that if you were a Microsoft, if you were a Google, if you were one of the big tech giants, and maybe, by the way, the tech giants can't buy anything anymore, given the regulatory environment. But historically, this was a company that I believe a lot of people were knocking on their door over the past couple of years.
I think it's interesting to watch how big tech has become bigger through acquisition. Salesforce has been a strong and very positive acquirer of companies. Microsoft has been an acquirer, and I think those have been really additive to those companies. Slack's an interesting question. Microsoft has a competitive product. They may still want to continue to run that out, see how that does, although Slack seems to have a clear leadership position. Once you're public, there's more mechanisms, although the ownership concentration is still...
Do you think big tech, by the way, is too big in terms of, because they are the companies that have been acquiring a lot of the companies that you have ultimately invested in. Has it changed the calculus as an investor? What's happening now in the conversation in Washington?
So, when I think about investing, and I can only speak for Ben Narasin, not necessarily NEA as a whole, although I think some of this is similar to a lot of us. If I don't believe there's a path to a public company, I need to pass. If I'm betting on an acquisition, I believe I am making a mistake. I need to believe in, earlier you mentioned uncapped upside or uncapped opportunity. That's what I want. Any business I fund, I want to believe there is uncapped upside. And if there is, that means that company
But do you think there's a lot less space than there was even 5 years ago for a startup company to develop into this publicly traded company you're talking about because somehow, and this is the argument, that there's not competition in the marketplace and the big guys are so big that they would snuff out a smaller competitor?
I haven't noticed the snuffing out. You've got half the public companies now you had back in our era of the sort of 90s. But what I've noticed is that innovation gets paid exceptionally well. I believe in the United States we give credit for first to brand, not necessarily first to market. So I think Microsoft's a phenomenal company. Satya's been doing a phenomenal job there since he took over. But net, Slack as a product is, in my opinion, a better utilized product than Microsoft's own version, so they weren't able to counter it. There are instances where big companies can do things to get in the way, but we see innovation popping up all over the place where the big companies don't catch up. No matter how nimble a large tech company is, they're never going to be as nimble as that visionary startup leader with a single point of view that is going to relentlessly motivate themselves and their team towards that goal.